I love a good breakfast. Eggs, bacon, avocado, toast, a nice well-balanced meal to give me sustained energy throughout the day. I also love a good donut and some coffee as well. Problem is, if I have a donut in the morning, I'm crashing by 10 a.m. and ready for a nap. So having a good asset allocation is like having a good, well-balanced breakfast. You have many different assets working at the same time to give you a nice, balanced investment experience. Versus if you just had all of your eggs in one basket, one investment asset class, you might experience a lot of volatility however that asset goes. Kind of like a donut and a coffee where you have the spike in the blood sugar and the crash. Well, let's look at the four major asset classes that people typically invest in. So number one, we've got equities, or also known as stocks. So stocks, you can own individual ones, or you can own a basket of stocks all at once by investing in mutual funds or index funds. Now, stocks traditionally offer the highest returns, but they do carry the most risk. Number two, we've got fixed income or bonds. Much like individual stocks, you can own individual bonds or own a basket of bonds through mutual funds or index funds. I want to pause here and encourage you, go back to my prior video, what is a mutual fund, to see how you can diversify your stocks and bonds in a mutual fund portfolio. Thirdly, we've got cash. So cash, you always want to have some in the bank. It'll give you a little bit of interest, but really cash is there to take care of emergencies and also for big purchases so you don't have to go into debt to make those purchases. And the fourth major asset class that people typically invest in is real estate. So let's take the example of a rental property. If you own a rental property, you potentially have the ability for that property to rise in price. You also have the rental income that you'll receive minus the expenses. And thirdly, you can depreciate the rental property on a schedule for tax purposes. So those are the four major asset classes that you can invest in. Now let's look at what these two words mean together. So assets, we've got the four major types. Allocation simply means the distribution or how it's spread out. So let's say you've got 40% of your money in stocks, 25% in bonds, 25% in real estate, and 10% in cash. Basically, that means that you've got the assets and the distribution is the allocation. So just as King Solomon said, invest in 7 ventures, yes, in 8. You never know what disaster may come upon the land. Having a good asset allocation will give you a nice, sustained, balanced experience, just like a good meal, rather than the volatile up and down like the donut and coffee.